According to a research, 43% of millennials are not investing in anything like stocks or bonds. It means that more than half of young people are investing in something for their retirement in the future. Investment is very useful when people have to prepare a retirement plan only by themselves. It means that it is important when their companies don't offer their retirement plan. Investment has tax-exempt benefits, so many people know that they should invest as soon as possible. But young people cannot afford to invest in their money because some of them have to return their educational loan or others get a small amount of salaries. However, even if they do not have a lot of money or have some educational loan, they can invest. We will actually make some portfolio in this research.
So before we describe about our portfolio, I'd like to describe what is a portfolio. Portfolio is a collection of investments such as stocks and bonds. According to Investopedia, a portfolio may contain a wide range of assets, including real estate, art, and private investments. So investors can put all their assets into one stocks. However, we create portfolio. So why we make a portfolio? The answer is that in order to avoid losses, which is result from investment. Let me explain about this. If one investors put all their assets into the stocks of umbrella company, they will get lost. If umbrella company go bankrupt or sunny days goes on. However, if one investors put their asset into stocks of umbrella company and stocks of sun cream factory, they don't lose because even if they lost because of umbrella factory stock, they will get profit from sunscreen companies in stocks. That's why we create a portfolio so that we can compensate losses from other companies' profit. So let me introduce the steps of making a portfolio. I summarize how to make a portfolio in 3 steps. First, make it clear why you make an investment. It is important to decide why we make a portfolio. Like if we wanna get large amount at the point before we retire, we need to make a stable investment. If we want to get big amount of money in soon, we need to invest the higher risk investment. Second, make a deep research about stocks and bonds. It is important to research stocks and bonds stabilities so that we don't lose money. Third, decide a combination of stocks based on your requirements and stocks and bonds data. Like the example of umbrella and sun cream factory, we need to find out the great combination of stocks and bonds.
I will explain about investment risk. Generally, investment risk is categorized by 2 types, systematic risk and unsystematic risk. Systematic risk is also called market risk. It can affect an entire economic market overall or a large percent of the total amount. So there are various systematic risks. And the first systematic risk is country risk. It generates when a country defaults. It occurs in bonds or bonds, stocks, or mutual funds. Second systematic risk is foreign exchange rate risk. It occurs when a currency exchanges. And because the rate always changes, so investors sometimes make a loss. The third one is interest rate risk. It occurs because interest rate can change the value of investment, and it affects bonds more than stocks. The fourth risk is political risk. It occurs due to the instability of a country, like the change in government or military control. The fifth is liquidity risk, which is investors' ability to transact their investment for cash. Sixth is inflation risk. it can change the price of investment. And the second type is unsystematic risk. It is also called specific risk or idiosyncratic risk. Like systematic risk, there are various unsystematic risks. The first one is business risk. It occurs when investors invest in stocks. If a company goes bankrupt, the company prioritizes to return the interest of bonds. So there is a possibility that stockholders cannot get any returns. And second is volatility risk. It generates when the company's performance fluctuates. Third one is call risk. It occurs when a bond is called before the maturity date.
Next, I would like to describe the types of investors. We need to make a portfolio depending on our characteristics. I divided characteristics into three types. First one is below average tolerance people who do not prefer to take risks. This kind of people need to invest for the stable stocks and bonds. Next, average moderate risk tolerance people who take risks but not so much. And third one is least high risk tolerance people who take risks. This kind of people can invest. This kind of people don't feel stress about the risk of losing money. So I think this kind of people can invest to the company stocks like venture company.
So next, we will make an actual portfolio. There is some scenarios. Like to make a portfolio, we have to use 7 companies: Starbucks, McDonald's, Uber Technologies, Pepsi Corporation, Nestle, Tyson Foods, and Facebook. And we can use either all of the companies' investment or some of them. And it is decided that each of us invest in $5,000.
Let me introduce my portfolio. My condition is I need to get money, which is enough to live a life after my retirement. The money I need to have is $100,000, and my retirement is 45 years later. My type of investing is average tolerance of risk. I'm 24 years old and I can take some risks. Therefore, I decided to put 70% of my asset into stocks and 30% of my asset to treasury bonds. This is my portfolio. I use all the companies' stock for my portfolio because I wanted to avoid the risk of one company's losses. This is the data of the companies that I will put money on it. Let me describe why I choose these companies and why I decide to put my asset into those companies. First, I decided to put 12% of my asset into Starbucks bonds, Starbucks stocks. Its stock's market value, market price, abruptly go down during the because of the pandemic during in May and April. However, their market price recovered soon, and now I can say that its market price is not so low. And next, their beta is less than 1, and I can say that Starbucks bond is very stable. Third, their EBITDA is 40.38, and this is more than the average of beverage and food industry. And I can say that Starbucks bond is worth to buy it. And I put large portion of my asset into these stocks. And the McDonald's stocks is very, I can say that it is very stable stock. McDonald's stocks market price abruptly go down due to coronavirus, However, they recovered so soon, and their dividend is 5, and I think it is high, and their beta is 0.62, and it is quite stable. I can say that it is quite stable bonds. In addition to this, their cash flow is 10.11, and I can say that their financial operation is very solid. And I can say that this bond is so stable. So I put 70% of my asset into these stocks. Next, I also put a large portion of my assets into Uber Technologies. As you can see, its stock market price abruptly go down in May. However, it recovered so quickly than other companies. And I think during the COVID-19 world, people prefer to buy restaurant foods and eat at home rather going outside and rather go eat out. Therefore, I think more and more people will become to use Uber Technologies. So I felt large potential of Uber Technologies, and I put large portion of my asset into this stock. And their cash flow is negative. Although their cash flow is negative, I think this company is growing up. So I think it is investing. This number is negative because they are investing for their growth. I put 11% of my stock to Pepsi Corporation. I can also see that its market price abruptly go down during COVID-19, and they recovered. Market price recovered so soon too, and Pepsi's beta is the lowest of 7 stocks. And I can say Pepsi's presence of beverage industry is so stable that I was to put my asset in this. I put 40% of my asset into Nestle. I can see its market price is going down 3 months in a row, and their score of stock is not so bad, but I didn't think this is attractive. So I decided to put 4% of my asset. I put 3% of my asset into Tyson Food stock. This I can see stagnation in the market price. This chart, and its beta is. I can see the stagnation in this chart, but their beta is 0. Lower than 1, and I believe its presence is very big, and its dividend is not so bad. So I decided to put 3% of my asset in this stock. I put 7% of my asset into Facebook stock. The stock price has been increasing, and I realized that their EBITDA is so bigger than the average rate of EBITDA in internet industry. Therefore, I decided to put 7% of my asset. And I put 30% of my asset into treasury bond because I saw during COVID-19 world, stock is not stable enough to put all my money into it. And I think treasury bond is very stable, and I am sure to get return. So I decided to put 30% of my asset into treasury bonds.
Okay, I will explain my portfolio. I will use some analysis, and the first one is technical analysis. Technical analysis predict price movement by examining historical data, mainly price and values. There are two types of approach of technical analysis, top-down approaches and bottom-down approach. Top-down approach is for short-term investors, so I will use it. First, I will check which industry increased the sales in 2020. Due to the pandemic of the coronavirus, I think many industries suffered, but some industries increased the sales. According to IBIS World, in 2017, online grocery sales industries grew the most by 74.5%. The company's example of this industry are Amazon, Walmart, or the Kroger Corporation. And the second industry is cough and cold medicine manufacturing OTC industry, which has 68.8% growth. These industries increased the demand during the pandemic. Out of 7 companies, I expect that Uber Technologies increased their sales, but it declined by 80%. So it is difficult for me to pick up some stocks of these 7 companies by seeing the whole economy. So then I will check each company's investment of each company's movement of the stock price for 6 months. First, McDonald's price is increasing now compared with June or July. The highest price was October, and after November it is decreasing, but it looks stable at higher point. The second, Starbucks price is similar to McDonald's, but the price moves at lower point than McDonald's. The price is increasing every month, and it is the highest point. It is the highest now. I expect that it is because the demand of hot drink is increasing during the cold season. Third, Uber Technologies price suddenly increased in November. In October, the price was $33.41, but now the price is $50.72. It is because the demand of food delivery increases due to the pandemic, due to the increase of coronavirus. Fourth, Pepsi's price moves dramatically. In November, it looks stable at higher point, but it may become lower in the near future. Fifth, Nestlé's price was low in May or June, but it increased from July, and after November, it declines again. I think that the coffee brand demand increasing in this season. Also, in my country, in Valentine's Day, there is a culture that women give chocolate to men. So the demand of chocolate like Kit Kat will increase. So I think the price probably will increase. Six, Tyson Foods price moves dramatically up and down. In June, the price became the peak, but it decreased soon. It looks a riskier stock, but in November, it became stable at a higher point. Finally, Facebook's price was relatively low in May and June. Now the price is stable at the middle point. The demand of this product does not change seasonally, so the stock looks stable, except for scandals. I see some stocks returns. Many companies' returns dramatically change every year, and I became interested in Tyson Foods returns and Facebook returns. Tyson Foods returns moved dramatically, but the whole returns relatively high. And Facebook's returns was no minus except for 2018. So I evaluate which stocks is riskier or not by the price movement. Stocks should be bought with lower price and sold with higher price. So I should choose the stocks whose price will increase in the future. So I will pick Nestle at first because the price is low now, but I expect the price will increase in the future. The second is Facebook. It is because it is stable and can get more returns. The third one is Tyson Food. It also has more returns. And I also use fundamental analysis. Fundamental analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. Fundamental analysis has two types, quantitative and qualitative. First, I will use quantitative analysis, fundamental analysis. In this analysis, investors see financial numbers like assets, revenues, or profits. In this case, I will use revenues, net income, and return on equity. First, McDonald's revenue decreased a little compared with 2018, but the net income increased. Second, Starbucks revenues decreased a little, and net income dramatically decreased. I think it means that the company used a lot for something like investment. Third, Uber's revenue is increasing every year, but the net income and return on equity are minus, so the company invested a lot, but in 2019 there was no return for this investment. Even if the company cannot get the return for short term, sometimes it can get returns a few years later. Fourth, Pepsi's revenue increased, but the net income decreased by almost half. And the return on equity is good, so I think this company has to reconsider the way of operations. Fifth, Nestle's revenue increased a little, but the amount of revenues is very large. And net income also is increasing every year, so the company's performance looks very good. Six, Tyson's revenue increased a little, but net income decreased a little. Net income is very few compared with the revenue, so the cost is too large. And return on equity is not so high, so the investment does not change to the return. Seventh, Facebook's revenues is dramatically increasing every year by $15 billion, but the net income decreased a little, and return on equity is not bad. So from this result, I want to invest in Pepsi, Nestle, and Facebook. Next, I will analyze the stocks by using qualitative analysis. In qualitative analysis, investors see the company's competitive advantage or management. All companies have the brand recognition in each industry. Especially McDonald's has the largest sales in the fast food industry in the world, so it has a competitive advantage rather than Starbucks. Also, Facebook has a bad image due to the 2016 scandals, but recently the image recovers. And Uber technology is a growing company, so I think it has a competitive disadvantage at the point of brand recognition. This is my portfolio. I attracted Uber's growth seen from the increase of revenue. Also, Nestle's stock price is low, but I expect that the price will increase in the future. And McDonald's has the brand recognition and continues to make a stable, high profit for a long term. And Facebook has enough brand recognition, and the revenue is increasing. So I choose these 4 stocks. And in conclusion, as I discussed before, to reduce the investment risk, people should invest in various industries because if one industry does not go well, we can cover the returns of other industries. From these facts, the investor's portfolio 1 is the average tolerance person, while the investor's portfolio 2 is high risk tolerance person. Portfolio 1 includes a variety of industries and companies, while portfolio 2 focuses a few companies. Making a portfolio has variety and there is no only one correct answer. According to the characteristics of each person, they make very different portfolios. However, even if the people attract to higher risk with higher interest stocks, it is better to reduce the risk as much as possible. So therefore, all investors should analyze the company or industries well.